7 strategies to exit your real estate property. Hey there, property owners. It's no secret that property owners may not, all acquire property certain ways. Some are inherited, some buy it, some exchange into it. But most of the time, nobody ever tell a property owner how to exit the property. Most of the time, property owners just hire an agent and they'll sell it on the MLS and hope that a bank will qualify a buyer for it, or that a passionate buyer will have the cash to come along and purchase the property. Well, that's only one way to get out of a property. What I want to show you today is share with you, rather, it's 7 exit strategies you can use for your property to liquidate your funds. You can also do, these are also strategies that defer your capital gains. And, a lot of these strategies will be low risk or no cost for closing. So come on, let's dive into it. Get right to the nuts and bolts. So 7 exit strategies I want to share with you that you can use outside of just a real estate agent to exit out of your property. These are in no particular order, and these are, pretty general. These are not for anybody in particular, but maybe you, in your circumstances where you are, one of these ideas might click for you, or, you might be able to use it if you have more than one property. These are low risk strategies. These are, deferrable, tax deferrable strategies. Also, they're low risk, low closing costs, and most of the time is no credit. You won't need any credit. You won't have to get qualified for a bank by a bank to execute these strategies. So the first one I want to talk about is the 1031 exchange. 1031 exchange is where you're selling a property, or you're going to sell a property. It's a time-related strategy where you got to identify your property in a certain amount of time, and you got to actually sell your property and purchase that property, the next property, in a certain amount of time. So it's a small window that you get to exchange the sale of your property, into a like-kind investment, or investment that's worth more. The purpose of a 1031 exchange is so that you can shelf your basis or your capital gains, and grow your basis by shelving your capital gains into a like-kind investment. So a great alternative for a 1031 exchange, and this is for residential or commercial. So a great alternative, a great unconventional alternative to a 1031 exchange is a 180 exchange into a qualified opportunity zone fund. Opportunity zones are brand new to the market. They just started to hit the market back in 2018. It's been big in Puerto Rico for some time, and investors have been making big gains out in these opportunity zones. With opportunity zone, you're able to invest your gains from the sale of an investment for the opportunity to grow your investment, and you get to keep the gains on that growth. So let's say you sold stock for $1 million and you have $500,000 of gains, and instead of paying taxes on that $500,000, you could take that $500,000 and invest it into a qualified opportunity zone fund, and that $500,000 could sit there in that fund for 10 years, and whatever capital gains you make on that $500,000 after 10 years, you get to keep that capital gains. So it's a great way to shelf your basis, which is what a 1031 exchange is for. So you not only do you not shelf your basis, but shelf your taxes. So not only do you shelf your taxes, and you're actually getting a step up in equity, you're also liquidating the basis with a 180 exchange, because your basis is liquidated into cash. And so you can either keep that basis and to reinvest into another property, or spend it how you want. Or like I say, you can reinvest it back into the 180 exchange in a qualified opportunity zone fund. So that's an alternative right there to a 1031 exchange. If you want an alternative, the 180 exchange and the qualified opportunity zone fund. That's the first one. The next one I want to talk about is a HELOC. That's a home equity line of credit. A home equity line of credit is a credit that's secured by the equity in your property on the credit card. So, or it could be a line of credit from a bank. But anyway, you spend it and you pay interest as you spend the money. So, a home equity line of credit. Alternative to that is a partial note. What you can do is create a note. You originate the note, and you can actually sell the note to a note buyer, and the note buyer will give you a discount, a cash discount on the note itself. So you're not really paying as much interest as you would with a HELOC, but you're taking a discount, a cash discount on your equity. So now with that, you can repay it back and still recapture your equity from the note itself, but it's a little bit cheaper, and there's no, it's a lot less paperwork involved in a HELOC with a partial note. So alternative to a HELOC is just a sell a partial note. If you need, $50,000, sell a $100,000 note, for $50,000. It's that simple, and you just pay the note back. It'd probably be better terms than a HELOC. So the typical cash sale, alternative to that is, a typical cash sale was with your real estate investor, or excuse me, your real estate agent. You're talking about realizing your gains, and you have to pay taxes on this sale. So this is the big thing about a cash sale, and most likely, a lot of times when you're making a cash sale, you're taking a discount on your equity also. So, we know most likely when it's a cash sale, you could take a discount and you will have to pay taxes on that sale. Now, the unconventional alternative to a cash sale is an installment sale on a land trust. An installment sale is a land contract or a contract for deed or, bond for deed, some states are called. You use these as a way to finance your property. The biggest benefit about an installment sale is you get interest, so you also getting paid on the interest of the land contract, and then you're also able to defer your capital gains on the installment sale. And then another great advantage of a land contract is you're taking control of your equity. So however long you want to expose yourself to the risk of having financing a property, you could do that. So if you want to take a 4-year balloon or a 20-year balloon and still get your interest, that's totally up to you as the seller financing the property. So, it's always best to take as much much interest as you can on the installment sale and make the payments make the terms as long as you can, because you want to get as much money as you can out of that contract. But if you want to minimize your risk, just make it a short balloon, 2, 4, 5 years. A lot of people do, and get in and out the property. So a great alternative to a cash sale, where you have to pay, like I say, the taxes, and you might take a discount on your property. A great alternative to that is a land contract or a contract for deed, bond for deed. You get your asking price. You get more than more than your selling price, because you get interest, and you get to defer your capital gains. So there's a lot more benefits to a land contract than a cash sale. So that's straight out a good alternative here. And then the land trust, I'll leave this out for now, but the land trust is also a good alternative. You can roll your property, the title of your property, right into the land trust, and you wouldn't have to pay any transfer taxes or closing costs. You can put a beneficiary in your title, and the beneficiary could pay the grantor for the value of whatever, or trade the value, whatever the value is. If it's $100,000, the beneficiary paid a grantor, or is really the trustee, pay the trustee $100,000. The trustee will assign beneficial interest to the beneficiary, and now the beneficiary owns that trust and the title that belongs to the trust. So that's another good way, to do a sale versus a cash sale. That's another alternative to a cash sale. So an unconventional alternative to a cash sale is a land trust or a land contract. So moving on here to reverse mortgages. These are typically, things we would see more for elderly individuals who have equity in their property, but for some reason they need to pull some equity out of their property. They might need a couple $100,000 for whatever the case may be. The problem with the reverse mortgage is that you got to worry about the age of the individual and will they be able to complete the terms, and it's almost questionable, are these predatory? So the alternative to a reverse mortgage is a monetized installment sale. So what this is basically is a third party will come in and purchase your land contract from you, and give you the price of your land contract for a small discount. It's typically about 95 cents on the dollar. So you get, $100,000 house, you get $95,000, up front. And what happened is this is more of a loan than a sale. So you're getting this $95,000, but what happened is they keep the interest to pay for the taxes on that $95,000. So you keep the $95,000, and the intermediary keeps the interest in the 5%, and you have a 30-year loan on a property that's no recourse. So it's a great option to a reverse mortgage. It allows the owner to exit the property with a loan that they don't have to pay back on a piece of property that they're exiting. So this would be great for an elderly individual who may be going to a retirement home. So a monetized installment sale. You exit the you exit the property. The intermediary gives you the loan for the property, and the intermediary keeps the interest in the 5%, and you get the 30-year loan on the on your property. So it's a great win-win. Monetized installment sale. Now let's move on to a reverse sale. Now what is a reverse sale? A reverse sale is how you could pre-sell your property. Sell your property before you have to move. Without hiring an agent, and already have a buyer who's going to be ready to buy your property and save you all the headache of getting your house ready for sale or going to market, showings and all of that. Or even if it's commercial, this will work. A reverse sale. Sell your property before you move. One strategy you could use to do that is to use a land trust with a beneficial option. So it's the same thing that I was discussing up here with the land trust. You put the property in the land trust, and you identify your buyer, and you put your buyer in the trust as a beneficiary rather, and they'll have the right of first refusal to buy your property. So you can agree to have your property at $300,000, or excuse me, you can agree to that your trust will have a value of $300,000. So that trust will have a value of $300,000 that your buyer will have the first right of refusal on. You get an option fee for this. So the buyer will give you an option fee to be the first to purchase the property. And at the same time, you have your property already sold by the buyer before you even move. So that's a reverse sale. Sell your property before you move with a beneficial option on the land trust. So you take a land trust, you put your property inside, you put your title of your property in the land trust, and then you identify your end buyer. You add your end buyer to your land trust as a beneficiary, and when that beneficiary completely pay for the value of that trust, then you assign beneficial interest to that buyer. 100%. So now that buyer owns the new title and the trust, and your property is sold. So that's a reverse sale. Like I say, an option put, in the land trust with an option. Land trust with a beneficial option is all that is. Put your property in the trust, right of first refusal by a buyer. Now, if you're in creative financing of real estate, you may find yourself as an owner occupant in the land contract, in a lease option, or in a subject to deal, or with a wrap. These are a lot of the times these are deals you would see if you're owner occupant. Well, not that you will see, but that are starting to be more normal, I should say. So you want to refinance out of these financing vehicles, whether it's a land contract, lease option, subject to, or wrap. The great alternative to that is a portfolio loan. You find these at local banks. You could just Google it. Google in your area portfolio loan, and you'll have a couple of options, I'm sure. But Google portfolio loans. These are in-house loans by local banks. So that's why you're not going to see them handled by national companies. These are loans that are handled locally at local banks that are handled in-house and not sold to like Fannie and Freddie on the back end. They service these mortgages, they service these loans rather in-house. So it's a great tool to refinance out of creative financing, portfolio loans for owner occupants. Last but not least is the home equity loan. Now, the home equity loan is kind of different because with a home equity loan, you're getting a loan on the property, and it could be a small amount or it could be a large amount. The problem with a home equity loan is if the value of your property plummets and the interest of your loan continue to go up, then you're losing your basis. So the home equity loan could be kind of risky for a property owner. What I would the alternative strategy I would want to share with you is the collateralized mortgage. The collateralized mortgage is great just because it allows you to put a property up that you may own and you have equity in for the loan value that you want to receive. So you may have a property that's $300,000 and you want, $100,000. You say, hey, I'll put up $200,000 of equity in this property for that $100,000 loan. Easy enough. That's, a lot of people go for that. And a lot of these institutions, rather, will settle for that, no problem. Or even another investor. Another investor will be willing to give you the funds you need on your equity versus getting a home equity loan. So that's 1, 2, 3, 4, 5, 6, 7 strategies, unconventional alternative to bank financing, or these are 7 unconventional strategies. No bank financing. I hope you learned something either way. If you don't, let me know. Leave a comment. My name is Josh. I'll leave my phone number right here below the screen. Email me, contact me. We could chop it up some more or discuss anything that may be tickling your brain. Either way, like, subscribe, share, click on the next button. There's more videos